In this video, we will talk about Muscle Maker, trading under the symbol Gril. This company was suggested to me by some viewers, and after taking a look at it, I think that it really has a huge potential. In fact, this would be maybe the first time that I would say that this is a stock that can potentially go 10x or 20x in the month and years to come. So please watch this video till the end because we will cover what the company does, why I think it has such an amazing advantage over other competitors, where things currently stand, and if you should buy the shares. Muscle Maker is a keto restaurant chain that delivers essentially meal plans. It's basically a cross between Weight Watchers, Blue Apron, and your typical restaurant. Their meals are mostly focused on high protein, high fat diets. In other words, if you're someone who is in keto or Atkins, then Muscle Maker would be a good choice to consider. The restaurant operates both brick and mortar locations, shadow kitchens, and we're going to talk about that, as well as franchises, meaning they can scale up with other people's capital and have an additional revenue stream in the royalties. The main advantages that they have are their clientele, military bases, and school campuses, as well as a new mentality in operating their business. So I will start with the first one, the military and the students. Both of them have one specific characteristic that justifies why a lot of businesses want to target them. This is even more the case with the military, by the way. They are what we call captive customers or captive clienteles. In the case of the military bases, is because they literally have nowhere else to go. Imagine if you're in Somalia. Are you really going to take a walk in town just to find a good restaurant? Probably not. So you will stick with whatever the military base has. Typically, McDonald's and Domino pizzas. So having a restaurant that adds to their choices is a very good thing. The second one, the students. The students are also kind of sort of like a captive clientele in the sense that they tend to eat in restaurants that are near them, whatever they are, and sometimes even if they're bad. The students have 3 additional advantages compared to the military. First of all, many of them, I know that I have back in those days, many of them have heard the benefits of keto. The second one is they want to eat, but they don't want to cook. What I mean by this is that if you really take an honest look at most college students, they want to eat, they don't know how to cook, and they don't want to know how to cook because they think that their time is better spent doing other things. So this is why their kitchen typically looks like a storage area for alcohol and empty takeout containers. And this is really the holy grail for restaurants. And finally, and this is especially true for restaurants like Muscle Maker, students are willing to spend a premium on food because it's not their money. So I remember spending $8.75 for an egg sandwich way back when, and I thought it was a good deal because money to me was something that my parents gave to me. It didn't really have another meaning other than it's a tool of exchange, really. The number is quite abstract. That was my case back when I was still in college. Targeting school campuses means that Muscle Maker will have a large captive clientele that has a lot of money and that is also willing to spend it. And this is really what makes Muscle Maker an interesting option. Now, where things currently stand with the whole pandemic and shutdowns around the world, they have started operating more and more shadow kitchens in large metropolitan areas. And this is a very encouraging sign because shadow kitchens differ from conventional restaurants in the sense that they are just a kitchen. They rely on delivering food via other platforms such as Uber Eats or Skip, DoorDash. This is why they don't have to rely on huge amounts of sales in order to pay for fixed costs because they have very low fixed costs compared to conventional restaurants. They also have more flexible working hours. They can also share their working space with other people, meaning they can sometimes sublease their location when they're not working. So there are more ways for them to make the most of their money. When things reopen up, I think that their operations are really going to take off simply because there would be more people around the campuses and more people asking for food and then more cash flows coming in, which then brings to more growth. And this is what we want to see in a super small cap like Muscle Maker. So by now, I've talked about the advantages for the company. A good question to ask is, what's in it for us, other than the fundamentals? And I think that one really good thing that's going for us is the timing. Right now, MuscleMate has a market cap of $26 million. Yeah, you heard it right. $26 million. In a financial market where most companies trade between 300 to a few billion dollars of market cap. Of course, we're talking about a restaurant chain that just opened up. Of course, this is not a Silicon Valley startup, except the main advantage that we have, and I truly believe that this is true, is in getting early. Because once things are no longer frozen like they are right now, the stock can really go anywhere, and there's no way to tell. We have seen multiple times in the past when the penny stocks that used to trade around, let's say 26 cents, when they jumped to $5, everyone was like, oh my god, how did that happen? Well, the truth is, we don't know when it happens. We just know when to put in the money to maximize our chance to see it happen to our portfolio. Like, for example, I remember looking back to Vaxart, this oral vaccine company that I've talked about on my channel before, and when I check when institutional shareholders entered in the company, it's usually when the shares were still trading around 15 or 20 cents. They didn't know when the stock is going to take off, but their main consideration is if the stock price is low enough so that there is a reason to see them skyrocketing in the future. Meaning anything that happens can boost them at least a couple $100 million in market cap. Because to be honest, $26 million market cap in this day and age is really almost nothing. So any sort of announcement, any sort of hype that this company can gather, any sort of YouTuber who talks about, not me of course, but let's say someone with 500,000 subscribers and they talk about this company and they don't even have to be very bullish. They can just talk about it and the market cap of this company can go up. It doesn't need to be a very good reason either. They just need the current market cap to be very low, low enough so that anything that happens to the company can boost its stock valuation. So this is what I think the current value proposition is for us traders. So yes, I recommend you to buy this share, but to be careful and to do your own research before jumping in. This is a super small cap. Anything can happen. And I would highly suggest you to only put in money that you can afford to lose. So in my case, it would probably be around 0.25 to 0.5% of my portfolio. So as far as price targets are concerned, I would say that it's better to set yourself a duration during which you will be holding the stock, because I think it's kind of irrelevant to predict where a company of 26 million market cap will go. I think a realistic approach would be to give it around 6 to 12 months of holding time to see if the stock can take off. If it does, then we will sell by then. If it doesn't, it's only 0.5% of your portfolio. So that is my take on Muscle Maker. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.